Good morning. I'm Harley Schlanger from the LaRouche Organization with your daily update for May 31st, 2022. Some of you have written to me and asked me about this question of the relationship between the war drive and the economic crisis. And there's some ways to look at it. But the most important point is that the financial system dominated by the transatlantic banks, the Wall Street, City of London, Brussels, Frankfurt banking system, is collapsing. It's collapsing because of the shift away from physical production into services and speculation, where the main source of wealth comes from taking products made cheaply in poor countries and cheaper raw materials from poor countries, so they can raise the prices for that, but at the same time limit the value added from production in the advanced sector countries, and at the same time move ahead with a Green New Deal and move toward a Great Reset. Now, the problem is the Great Reset requires that countries go along with giving up their sovereignty to accept the policies coming from Washington, London, and Wall Street. And many countries are refusing to do that. The Africans want coal-generated electricity, nuclear power-generated electricity, not solar panels and windmills. Many countries want the transportation capabilities developed by China with the Belt and Road Initiative, high-speed rail, connections to with dams and with the ports, the maritime Silk Road, rather than shipping their produced goods overseas and having to live off the proceeds of that as prices are going up. So there's an absolute devastating crunch underway. Now, at the same time, the war drive is generating a huge increase in spending on military. And I had a discussion today with someone who is involved in negotiations on the budget in the Bundestag in Germany. And he said that they're having a hard time figuring out how to have the increase in defense spending they're talking about over and above the existing budget without cutting other things. He said it's a huge fight and there's no solution, and no one really wants to talk about, is it really necessary to produce these arms to send them to a war that endangers the security of all of Europe? So what we're seeing is insane policies on the strategic front, but also on the economic. That's why Helga Zepp-LaRouche is insisting we need a shift of both strategic architecture and security architecture and financial architecture. I'm going to give you some examples of the economy, taking a look first at the United States, because there's a lot of bad economic news in the United States, but we're being told this is the aftermath of COVID, this is caused by Putin. And don't worry, the rate hikes will stop the inflation and then we'll be able to go back to normal in September. Now, partly what they mean by that is they're planning to go back to an increase in quantitative easing in September to fund the Green New Deal, the Build Back Better. But that doesn't add much to the physical economy. In fact, it's part of a speculative drive of the monetary and financial aggregates while the production side of the economy continues to plunge. Now, here are just some examples. The February-March 2022 trade deficit for the United States was $200 billion. Factory orders are 10% below for March 2022 what they were in March 2019. Household real incomes are down 10% compared to 1 year ago. There's a forecast, because of these accumulation of problems, there'll be 1 million layoffs over the summer. The U.S. residential real estate bubble stopped growing. And why is that? Well, existing home sales are down 29%, April 2021 to April 22. Mortgage applications are down. The average home price, meanwhile, has hit $550,000 in the United States. But people can't afford it, especially with the interest rates going up. The average mortgage payment today is 35% higher as of April 2022 compared to April 2021. Now, that's a huge reason why the home sales are down. But you also see the rapid decline in the stock market, and now we're seeing it hit many of the service sector companies, the AI companies, the tech companies. Just one example, part of the bubble was Snapchat, which had its stocks go up to over $80 a share, and now it's on a rapid decline along with companies like Netflix and Facebook. Snapchat is down to $14.50 a share. What is it? It's a social media site. It allows you to send videos and pictures, to add doodles or do some editing animations, and then deletes it after 10 seconds. But it portrays itself as a camera company. It has very little physical value. Its value depends on people who want to play games with sending photos. Now, how do you have an economy where an increasing sector of your economy is based on such kinds of stocks? Now, the way you keep the value up is quantitative easing. They're pumping money into these kinds of companies so that companies are able to get more funds. They sell bonds. They use the money from the bonds to buy their stock. The actual corporate debt has skyrocketed. The delinquency rate on corporate debt is up. Of new corporate debt offerings since 2019, over 40% of these corporations are issuing what are basically junk bonds, which means they have higher interest rates. But how do you cover higher interest rates if you produce no profits? And that's how you see the debt bubble skyrocketing. As a result, the quantitative easing has continued. Just listen to this figure. The Federal Reserve's balance sheet has grown from 2007, right before the crash, the real estate crash in 2008, from $924 billion to today $8.99 trillion. That means the Fed is buying financial instruments in its own name. Now, this is interesting that there's a report out from last week that the New York Federal Reserve owns 38% of all outstanding U.S. Treasury securities with 10 to 30 years until maturity. Now, the U.S. Treasury in 2021 issued $22.6 trillion of bonds, and the New York Fed purchased more than a third of that. So that helped keep interest rates low. Now they're moving to raise interest rates, supposedly to stop inflation. And so with the tapering going on, selling off the treasuries and raising interest rates, the mortgage rate has jumped from 3%, where it was in November 2021, to 5.25% today. That's why home sales are down, both existing sales and new sales. Now, what LaRouche always emphasized when you look at the economy is don't look at money, look at the physical economy. What's the comparative size in an economy of goods production and its industrial sector to the service sector? Now, one way to understand this is look at what's happening with Russia. Despite the brutal sanctions, the ruble has been rising. Why is that? Well, the Russian economy is based on physical production. It's smaller than what the United States used to be, or Japan, but it's producing things. Here are some of the percentages that Russia has for its exports compared to the global export markets. Russia produces food, 19.5% of global export of food is from Russia. That's almost 20%. Nickel, 20.4%. Semi-finished iron, 18.8%. Platinum, 16.6%. Oil, Russia is the world's third largest oil producer and the largest exporter of oil. So that means the ruble is backed by these production and distribution of these products, as well as fertilizer, as well as gold. Russia owns an enormous amount of gold. Now, the European Union is now moving to cut off gas shipments from Russia. They had an incomplete embargo, but they're moving to embargo more. Who gets hurt by that? Well, Russia will increase its sale of oil to India, its sale of oil and gas to China, probably to Indonesia and other countries. Meanwhile, it's going to cost more for people in Europe to fill their car tanks, to heat their homes this winter, to keep the lights on and the electricity going in factories. So what we're seeing is a global collapse of physical production, which means starvation because there's not enough food being produced, not because of Russia's war or special military operations in Ukraine, but because of the combination of the effects of the Green New Deal, the reset economically, and the move of the West from a physical economy to a post-industrial economy. That's the relationship of the war to the economy. Countries are trying to break with this financial system. That's what the Russians and Chinese are talking about. That's what the Belt and Road Initiative is about. Why do you think the United States is so hysterical about China's Belt and Road Initiative? China's doing things with their economy, which is what we used to do in the United States and in the West. Invest in the future, in new technologies, in research and development, in worker training, in infrastructure. Instead, we're buying weapons and shifting to less efficient energy production methods. That's a prescription for a collapse. And in order to stop the collapse, the London and Wall Street crowd is trying to prevent other countries from joining with Russia and China to move toward a potential new financial system. I'll have more on this over the next couple of days. But at the same time this is going on, it's worth noting that the Washington Post and other papers are beginning to recognize that even with all the weapons that are being committed to Ukraine, Ukraine can't win a war. The question is, at what point will there be a decision to negotiate and settle this? Or will it show what we've been saying, which is the decision being made from the West is to fight this war until the last Ukrainian is dead and the Russian economy is demolished. That's not a good plan for either peace or for security. That's why we need a new security and financial architecture. All right, thanks for joining me today. I'll be back again tomorrow.